Hello and welcome. You are watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are trading in trade today and buzzing in action in today's trade as well. Okay, so let's quickly start off by looking at the markets. The tide has turned and you can see a 148 point dip on the Sensex, 65,280 currently. Quarter percent of a fall right there. The markets have been trading in the positive zone for the large part of the day today, but now is where their pressure is emerging. The Nifty is also slipped below the 19,400 mark yet again, 0.3% lower in trade. Also, when we talk about the broader markets, the Nifty Mid Cap 100 and the Small Cap 100 indices right now, these were the big winners from today's trading action. You know, a very sharp move was being seen on these two sectors, but you can actually see them now trading at the day's low point. Despite that, Nifty Mid Cap 100 index still continues to hover near the all-time high levels as well, but 0.3% lower for this one. Also, when we talk about the Small Cap 100 index, let's look at that one too. Remember, it was trading above 12,000 odd levels for the large part of the trading session today, but it's now slipped into the red, 0.3% lower in trade as of now. So the broader market action is also weakened. Among the sectors, most of the sectors have actually come under pressure now. When we talk about the Nifty Bank, Private Bank, also financial services, Sensex, Nifty Auto, you also have the metal index. All of them are now trading down in trade. Let's look at the saving grace then. It's the IT sector that remains up about half% higher in trade right now. Of course, when we also see the FMCG and the realty pack, 0.2% higher in trade for these two indices as well. The top gainers and the losers list, let's revisit that one too. Adani Enterprises manages to still eke out some positive gains, about 0.3% higher in trade right now. You also have BPCL, IndusInd Bank, Asian Paints all up into the green. You also have Axis Bank, Bajaj Twins, BPCL and Britannia up in the green. But the downside, when we talk about the big losers in trade right now, Adani Ports is on the top list when we talk about the Nifty draggers, Apollo Hospitals, Bajaj Auto, Bharti Airtel. These are the stocks that are down in trade. Power Grid, Grasim, L&T, the other laggards, about over 1% odd fall is what we can see. But let's welcome our guest on the show. Akshay Bhagwat joins in. He's the Senior VP of Derivatives Research at JM Financial Services. Welcome, Akshay, and thank you so much for taking the time out. Your own sense of the markets right now and where do you see them headed? We've again seen volatility come in ahead of the expiry. Your thoughts now?
Good afternoon, Sakshi. Thanks for the invite on the show. Well, if you look at the markets, it's been a range-bound journey for the August series. 19,300 is clearly the support, and time and again we are slipping at the 19,600 mark. So I believe till we clearly break out of either side of this range, which I mentioned, there will not be a clear direction in the market. Right now, as it stands, probably there is a bit of jitteriness or nervousness, as you can say, today being the weekly expiry, and also because the Fed Chairman, Mr. Jerome Powell, speaks at the Jackson Hole Symposium that's slated tomorrow. So the market is taking things at a cautious note as I see it. The current momentum can again see the market revisit the support level on the downside, which is 19,300. That's the test for the Nifty as to how it plays out at the support zone of 19,300. In case we see a breakdown, then only we would recommend to go short on the market because it's been more of a range. So I would say patiently wait it out. If you want still to take a trade in this nervousness, then it's more of a theta scalping strategy where you sell at the resistance and buy at the support. So markets are going nowhere. It's in a range. If 19,300 breaks, then we have a direction setting up in the market.
Okay, we'll keep an eye out on the levels that you've just talked about as well. Sectorally speaking, do you have any thoughts, any preferences at this point in time as well in the large part of the consolidation that we've witnessed over the last 2 weeks, or both on the Nifty and the Nifty Bank? Investors' focus is shifting to stock-specific and sector-specific action. So, sectorally speaking, where are you right now more bullish on?
Look, the way the markets are, it's on a slippery turf. And if you look at the big boys of the market, be it Infosys or Reliance or HDFC Bank, they're not doing much. I mean, so they're frequently changing colors, someday in the green, someday in the red. So it would be unwise to take a positional bet on the big boys of the market. Rather, be in counters where the momentum is, where the gains are fast. And if you look at the markets, it's the mid cap counters which are still in the green. A lot of buying opportunities there, a lot of stocks where you can chase the momentum and be successful. So I would say mid cap is the space still to be in, because the markets are slippery but the mid caps are not. And if you want to take a sectoral bet, as of now I see that it can be the FMCG space, traditionally a defensive bet in such situations. And even if you look at the technical parameters and the derivative setups, I believe some of these stocks in the mid cap space will do good in this current market situation. Stocks which I have on my radar in this current situation in the FMCG space will be an ITC, a Marico, Colgate. So I would be watching these three stocks on the buy side in the current market situation from a trading perspective.
Okay, and any targets there for the near term?
If I look at ITC, ITC, I believe, is in the process of charting the short-term base at 442. We have seen good volume participation, a good recovery. So I believe for the next few trading sessions, that's with a time frame of maybe 8 to 10 trading sessions, I can see ITC once again moving up for the levels of 470. So that can be on your buy radar with the stop loss of the recent low of 440. The second one, which I spoke of, was Marico, which had successfully staged a positive breakout on the technical charts a few trading sessions back. This we saw it at possibly the levels of around 550, where we saw the breakout. The breakout levels have been revisited. It's again setting up for an upside momentum. So with a stop loss of 540, you can take a buy trade in Marico with a target of 590. So these two stocks will be on my watch list on the long side of trade in the current market scenario.
Okay, then let's talk about some of the biggest buzzers in trade today. GMR Airport, that stock is like soaring high, 9.5% uptick right now as well, despite the overall benchmark index softness, around 65 rupees odd. Last 5 days have been spectacular. 22% of a run up we've already witnessed in the last 5 days, and the last 6 months rally has been around 75% odd as well for the stock. So the stock has had a dream run. It's also the top gainer in the FNO space right now. Your thoughts on GMR airports, and what is working for this company, and going forward after this kind of a stupendous rally, does it still make sense for investors to take a bet here?
Very rightly pointed out, Sakshi. This stock is in a stellar momentum run. Today, the volumes have been exceptional. The stock is moving one way. There is no stopping it. Whatever way the indices work, there is no correlation with the indices. I believe the stock is headed for its all-time high levels of 90 plus, and the momentum is still intact in the stock. Maybe it might jerk a bit here and there, but these jerks are not to be worried about. So, as an investor, you need to be still positioned on the buy side of this trade. I am looking forward for targets of around 95 to 100 with a time frame of around 1.5 to 2 months. If you want to take a fresh long or a buy trade at the current juncture, I would say you still can go long at these elevated prices. Maybe even you can look to add dips in case you get around 62 odd levels. Keep a stop loss of 55, and possibly your target, which I look forward to, would be 90 in case you're looking from a 15 to 20-day trading perspective.
Okay, got that. So that as far as GMR Infra is concerned, and the strategy right there. Let's also talk about a new age tech stock, and that is Paytm. The shares are at an 18-month high. The stock did gain after Bernstein expected it to touch 1100 in 12 months in trade today, but it's now turned flattish. It had a very good run up in the morning trade, but it's now just flattened out at 905. Anything, do you track at all this stock, and would you want to suggest any trade on this?
Well, if I look at the technical price structure of ATM, from a positional perspective, with a medium-term horizon of 3 months, definitely there is still more upside to go in the stock. But if I were to time the stock to buy it at the current level, I would not be in a hurry to buy it at the current rates, because the point where it is at 905, I believe for the short term, that with a 1 week perspective, you might get some dips around 870 or 850 at the best. So don't be in a hurry. You can easily buy this between 850 to 870. You will get a dip in the stock. Position yourself with a slightly medium term horizon, and I believe that stock is setting up well for targets of 975 plus. As a stop loss on this trade, your stops should be below 700, below 790, with the current rate being around 900.
Okay, let me mark out one more stock, and that is Coforge from the mid-cap IT basket. Very strong run-up is what we've seen on Coforge shares as well. On an intraday basis, if we see, Coforge is up by 10 odd percent at 53.98. I know it is a high-ticket item, Akshat, and but the kind of run-up that we've been seeing over the last 5 odd sessions has been strong. About 8% odd is what we've already seen. A month's time, 15%, 6 months, 23% move on Coforge Limited. What's behind the surge that we've seen today, and can it be extended?
Very rightly said. Today, the volumes are extraordinarily large in Coforge. I believe there was a block deal in the morning in Coforge. And if you look at post the block deal, which probably happened at slightly lower levels, with the stock open around 4,800, there has been no stopping the stock in intraday session. So the momentum is strong. It's about just riding the momentum. I see the stock going to the all-time high levels, which was seen somewhere in the month of October 2022. So 6065 is where I target the stock with a time horizon of 1.5 to 2 months. As a stop loss on this trade, you can have a stop of 4750 and ride the rally on the long side of trade.
Okay, let me also talk to you about the railway space, especially the wagon makers. Titagar wagons, that stock and Titagar Rail Systems is up about 9.9%. We are seeing Jupiter wagons, it's been constantly on an up move right now at a 5%. I guess it is a circuit right now, but 20% surge, 21% surge in the past 5 days. 55% surge in the last 1 month for Jupiter wagons too. How are you looking at the railway space at a large, and Jupiter wagons and Titagar wagons kind of shares, and any other stock also from this space that attracts you?
Uh, as I said at the beginning of the show, it's more about riding the momentum. And clearly, as you have picked up the railway stocks, there is where the momentum is. There is where you can make fast money in a very short time frame. So these are clearly trading bets. The stocks which we mentioned, you mentioned just now, most of them have had a dream rally. But the one which I see right now is Indian Rail Tourism, which is IRCTC. This stock has not yet moved much and
Yeah.
is probably setting up for a breakout. As I see it, there is an inverse head and shoulder building up in the stock, which is a bullish pattern. This pattern would confirm once we have a clear breakout about the 675 mark. We are at 6.5. And I am keeping hopes that this breakout will soon happen. So be placed on the long side in the stock. It's a preempt which I'm taking in terms of the breakout at 675. If this breakout matures, I see the stock moving up till around 740 to 750 with a time frame of 1.5 to 2 months. As a stop loss on this trade, you can take 635 as your stop.
Got that. Several of the sectors and stocks that we've touched upon. Many thanks, Akshat, for being with us and sharing with us all these insights on several stocks and the strategy that you've recommended in the overall markets for investors to follow, with a whole host of global events lined up for this week too. But let's revisit the markets. 140 points down in trade, about 65,296 on the Sensex. The Nifty down by about 50 odd levels at 19,393, so just below that 19,400 mark. Will anything change in the last 15 minutes of trade? Looks like the markets are ready to give up the green zone in today's trading action, because we are now increasingly down about 0.3% lower in trade. But we'll keep an eye on some of the sectors and the stocks that continue to give you opportunities in the equity market. So do stay tuned onto for that as well on Business Today TV. What you should also get ready is for our special series, that is Market Masters, where market gurus reveal their investment strategies for a winning portfolio. Join us on the coming Monday, that's 28th of August, with Ravi Dharamshi, founder, MD and CIO of Value Quest Investments Advisors, to get his market insights and in-depth market analysis. You can also send us your queries on this number that's flashing on your screens. That's 730-308-0488, and the questions will be taken live on this one.
happened in the last 12 hours with ISRO and its achievements. First, tell us what is the mood in your team? How overwhelmed are you? How proud and how happy are you today?